Unlocking Warren Buffett's investment secrets. Think and invest like a billionaire. Warren Buffett, one of the richest and most successful investors in history. This guy's a legend. How does he think? How does he invest? And how can you apply his strategies to build wealth? In this video, we'll break down Buffett's mindset, investment principles, and key values that made him a billionaire. We're talking actionable advice you can use to make smarter decisions with your money. Whether you're just starting out or you're already a seasoned investor, there's something here for everyone. So buckle up, smash that like button, and let's dive into the mind of the Oracle of Omaha. Alright, let's talk about the Buffett mindset. This isn't about some get-rich-quick scheme. This is about playing the long game. Buffett once said, "The stock market is designed to transfer money from the impatient to the patient." Think about that for a second. Most people jump into the market when it's hot, chasing the latest trends, trying to get rich quick. But what happens when the market inevitably cools down? They panic, they sell at a loss, and who profits? The patient investors, the ones who held on, the ones who weren't afraid to ride out the storm. Buffett's approach is about ignoring the noise, the daily fluctuations, the hype. He's in it for the long haul. He's looking for companies with solid fundamentals, companies that are going to be around for decades, not months. And this long-term mindset applies to more than just investing. It's about your career, your relationships, your personal growth. It's about consistently making smart choices today that set you up for success years down the line. Remember, building wealth takes time, it takes discipline, it takes patience. But most importantly, it takes the right mindset. So ditch the get-rich-quick mentality and embrace the power of long-term thinking. Now, let's talk about another crucial aspect of the Buffett mindset: loving what you do. Buffett's incredibly passionate about investing. He genuinely enjoys the process of researching companies, understanding their businesses, and finding undervalued opportunities. And this passion is a huge part of his success. When you love what you do, it doesn't feel like work. You're more likely to put in the extra effort, to stay disciplined, to weather the storms. Think about it. Buffett's been doing this for over 70 years. That's not just dedication, that's genuine love for the game, and it's not just about money for him. He still lives in the same house he bought in 1958. Why? Because he focuses on value, not luxury. So, find what you're passionate about, something that truly excites you, and pursue it relentlessly. Because when you love what you do, success becomes a natural byproduct. Alright, let's dive into some of Buffett's core investment principles. And the first one is crucial: invest in what you understand. Buffett's a big believer in sticking to your circle of competence. He avoids industries he doesn't understand. That's why he never invested in cryptocurrencies. He even admitted he didn't fully understand how tech companies like Amazon and Google made money in their early days. And that's okay. You don't need to be an expert in everything. The key is to focus on businesses you can wrap your head around. If you can't explain a company's business model to a 5-year-old, you probably shouldn't be investing in it. Don't get caught up in the hype, the jargon, the complexity. Stick to what you know, what you can analyze, what makes sense to you. Remember, investing is about minimizing risk and maximizing returns, and understanding what you're investing in is the first step towards achieving that. Now let's talk about another one of Buffett's famous principles: buy quality businesses at a fair price. He's not looking for quick flips, he's looking for companies with strong fundamentals, a proven track record, and a durable competitive advantage. Buffett looks for economic moats, businesses that can withstand competition for decades. Think about companies like Coca-Cola, Apple, or Geico. These are businesses with strong brands, loyal customers, and efficient operations. They're built to last, and the key is to buy these companies at a fair price. Don't overpay, even for a great business. Remember, value investing is about buying a dollar for 50 cents. It's about finding those hidden gems, those undervalued opportunities that the market has overlooked. So, do your research, analyze the financials, understand the industry, and be patient. The right opportunities will present themselves if you're willing to wait for them. Now let's talk about one of the most powerful forces in investing: compounding. Buffett's often called compounding the eighth wonder of the world, and for good reason. It's the snowball effect of earning returns on your returns, year after year. And here's the thing, Buffett's wealth didn't explode until after he turned 50. Why? Compounding interest. It takes time for the magic of compounding to really kick in. The earlier you start investing, the more time your money has to grow exponentially. Think of it like this: if you invest $10,000 today at a 7% annual return, it'll be worth over $100,000 in 30 years. That's the power of compounding. So, don't underestimate the importance of starting early, even if it's with small amounts. Consistency and time are your greatest allies in the game of investing. This next principle is one of Buffett's most famous. Be fearful when others are greedy, and greedy when others are fearful. This is all about going against the herd mentality, about zigging when everyone else zags. When markets are soaring, everyone's euphoric, throwing money at every hot stock. That's when you need to be cautious, to remember that what goes up must come down. On the other hand, when the market crashes and everyone's panicking, selling their stocks for pennies on the dollar, that's when you need to be greedy. That's when you find the best deals, the biggest bargains. Buffett buys when the market is down. While others panic, he sees opportunity. He understands that market downturns are a natural part of the cycle, and they often present the best buying opportunities for disciplined investors. So don't let your emotions dictate your investment decisions. Stay calm, think rationally, and remember to be greedy when others are fearful and fearful when others are greedy. Now let's move on to the core values that have been instrumental in Buffett's success. And the first one is a biggie: patience. Buffett's a long-term investor. He doesn't need to hit home runs every time. He's content with steady, consistent growth over time. He understands that building wealth is a marathon, not a sprint. There will be ups and downs, bull markets and bear markets, but through it all he remains patient. And this ties into another crucial value: discipline. Buffett doesn't panic when stocks fall. He stays calm and thinks long-term. He sticks to his investment strategy even when things get tough. He doesn't get swayed by emotions, by hype, by short-term fluctuations. He stays disciplined, he stays focused, and he stays the course. So, cultivate patience and discipline in your own investing journey. Remember, slow and steady wins the race. Alright, let's talk about another one of Buffett's secrets to success: continuous learning. This guy's a learning machine. He reads 500 pages a day. He's constantly seeking new knowledge, new insights, new perspectives, and that's what sets him apart. The best investors are lifelong learners. They're never satisfied with what they know. They're always looking for an edge, for ways to improve their understanding of the markets, of businesses, of the world. And the beautiful thing is, learning is more accessible than ever before. We have books, podcasts, articles, videos, online courses, you name it. There's a wealth of information out there, just waiting to be consumed. So make it a habit to learn something new every day, even if it's just for 30 minutes. Read books, listen to podcasts, follow industry experts. The more you learn, the better equipped you'll be to make informed investment decisions. Finally, let's talk about a value that's often overlooked: reputation. Buffett understands that your reputation is your most valuable asset. It takes years to build and seconds to destroy. He's known for his integrity, his honesty, his ethical business practices. And that reputation has been crucial to his success. People trust him, they respect him, they want to do business with him. Buffett says, it takes 20 years to build a reputation and 5 minutes to ruin it. And in today's interconnected world, that's truer than ever. One wrong move, one unethical decision can tarnish your reputation beyond repair. So protect your reputation fiercely. Be honest in your dealings, treat people with respect, and always strive to do the right thing even when no one's watching. Remember, a good reputation is invaluable both in business and in life. So, there you have it, the key takeaways from the life and investment strategies of Warren Buffett. Remember, Warren Buffett's success isn't just about investing. It's about discipline, patience, and long-term thinking. It's about loving what you do, continuously learning, and building a reputation based on integrity and trust. Which of these lessons will you apply? Comment below. I'm genuinely curious to hear your thoughts. And if you found this video helpful, do me a favor and hit that like button and subscribe for more investment strategies from the world's greatest investors. Let's keep learning, keep growing, and keep building wealth together. See you in the next video.